Good morning to my friends, fellow futures and Forex traders and family. It's time for the market forecast. Thursday, July the 22nd. Thanks for trusting me with your time. My name is John Hoagland. This morning at 7:30, the Thursday jobless claims numbers came out and they were considerably worse than they were expecting. There were even some upside revisions to last week's numbers, not looking good as far as employment. It took the equity markets largely from holding higher to mixed positions early in the session here. And we've got some interesting things to look at in the equities as far as our opportunities this morning. We're still waiting for existing home sales at 9 o'clock Central, leading indicators also at 9 o'clock Central, and then of course the nat gas number for you nat gas traders at 9:30 Central. As far as what's going on, U.S. stocks were set to continue higher this morning before the jobless claims numbers. They've turned a little bit lower to mixed, as jobless numbers are, of course, going to be a concern. We've got to hold that up against the backdrop of some positive earnings coming out this morning. Abbott Labs, AT&T, Intel, Twitter, and Capital One are on my list of earnings to come out after the close. So I know that a lot of folks with the chip situation will be keeping a close eye on Intel's earnings and their release. Elon Musk has flipped again on Bitcoin. He said it's most likely they will accept Bitcoin for Tesla. Bitcoin now back up to $32,000. I wonder if he kind of says that and buys a few more and then says, yeah, we're going to take Bitcoin for Tesla cars and brings it up again and gets out and then says, maybe we're not going to, and knocks it down again. Who knows? Crude prices have resolved higher after a surprise 2.2 boost in inventories announced by the EIA yesterday. They were looking for a small draw. There was a small boost in gasoline inventories did drop, but not as much as expected. So we never know what these markets are going to do and how they're going to respond to these economic numbers. As far as the VIX, the dollar index, and the 10-year yield, the VIX is pretty much steady at 1790 this morning. Dollar index slightly lower at 92.71, and the 10-year yield slightly lower again at 1.27%. As always, make sure you smack that lucky like button, as share, comment, question, feedback, and heckling are always welcome here at the Market Forecast, and so make sure you subscribe to our YouTube channel so you can get notifications when we do go live. I want to thank everybody for joining me yesterday for the group coaching session. Hopefully another useful session for you. I hope you enjoyed the interview with Michael Patak yesterday afternoon. Harry Gordon, I see that you are here. I got an email from you early yesterday. Never even looked at my emails before this session. We're going to talk a little bit about point of control this morning and how important it can be in looking for opportunities and looking for potential targets if we're in a trade. As always, good morning to everyone. Tone first in the room, you win the prize. Brian, Bill Phillips, good morning. Theo, good morning. Jorg, Vince, Tanya, good morning. Tim, my brother Rick, good to see you this morning. Up and at 'em early, I see. Caesar, Laura, Stock Trader, Harry, good you're here. I see you're here. Excellent, very good. Joseph, Ryan, let's crush it today. 100%. Murph, another fine day. Yes. Keith Abla, good to see you. Jerry is awake. Hopefully John is too. Kevin, Frederico, Greg H, good morning. Norman, good morning, everyone. Up 88.80 thanks to the hourly crude chart. Wow, that's a heck of a day there, Norman. Very nice job. Life changes on the hourly chart. Yeah, it does. You know, I'm a 30-minute and longer kind of guy. Harry Gordon, yes, excellent, good. April Gonzalez, John, thanks for this good job. Well, thank you for joining me. It's all for you. We're trying to find, as usual, accurate context, good risk management, and trying to exhibit, have patience, exhibit patience in your trading. Stacking bananas with me this morning. Good to see you stacking bananas. We're going to start stacking some dollars. Let's go ahead and jump into the charts here. Let me get this set for us. And we'll jump in, as always, with the daily and crude. We've got August expiring, really kind of brings the first clarity in open interest. Yesterday, we added 2,200 in open interest on an up day. A little bit lower volume, but I'm liking the increase in the open interest on this move to the upside. The 20 session exponential moving average, when we look back in history, it was really supportive this whole way up. Every time, well, most every time we got near it, we found support. Now it's acting in the opposite direction. This 20 session exponential moving average is acting as resistance. We don't know if that's going to continue, but it was a really good kind of gauge. Whenever we got near it on the way up, it was supportive. Is it going to be resistant now? It's just one of the many tools that traders use. The 20 session exponential moving average may be useful for us in our trading today, if at very least to limit risk. Economic and geopolitical risks remain. Take a look at the 30-minute chart and see what we've opened up like here. All right, so we don't have any overnight inventory really to work with here. We've got our weekly kickoff low, which we spent a couple days below. We broke out above it today. If this comes into play today, it's an interesting level for us. Overnight longs, no, we've reconciled those. Do we have a gap? No, we don't. What I'm looking at is the confluence of value high from yesterday, point of control from yesterday, settlement from yesterday, which is 70.30, and the week low from last week, all in this area. This is an area where we tend to find a lot of fish when there's a lot of confluence in unrelated things and related things. We start to see some decent opportunities here, and we see the market opening in range and value and now attempting to reject and accept higher pricing. If we accept higher pricing, of course, I think this is last week's high. Let's take a look. Hang on. Yeah, that's going to be, no, last week's high is up. Oh, no, that's a point of control. I'm sorry. This is a naked point of control up here, which, could be a target. Now, Harry, speaking of points of control, in volume profile, the point of control is the single price with the highest volume for the session. So we know that the highest price, the single price with the highest volume on this day was here. It's a comfort level. It's where people were extremely comfortable transacting business. It's the most popular price of the day. Therefore, it's probably the most visited. Now, in TPO profile, let's get to in TPO profile, this is yesterday's profile, by the way, in the S&Ps. The volume point of control is here. That's the highest single price with the highest volume. The TPO point of control is the widest line of TPOs closest to the center of the range. It's the most revisited price, therefore it's considered the fairest price. It's a comfortable place to revisit. When we do revisit it, it can be, like we mentioned, a target and or an opportunity for an execution. Now, when we were looking at the S&Ps, which we're going to go look at now, here's the daily. We knew that we had lots of unrechecked points of control and a little bit of a gap down here. when we started heading that way, there were lots of targets and ideas to look for for trades. When traders are looking at these levels, they tend to make price go to those levels. I think we talked on Monday morning about, hey, we've got a lot of business to kind of revisit and clean up down here. So I'm not going to be looking for any longs until we can maybe check out and see what happens below this level here. Obviously, it was rejected and we've been moving higher ever since. Okay, so the point of control is a comfort zone. It's the gooey middle of the Oreo that everybody likes. Is it the best place to trade in the daytime frame? Probably not. Probably not. Very rarely in the daytime frame is the point of control a good execution level because it's usually pretty centrally located in the range. There's a lot of risk on either side of it. We're all looking for places where the market is not going to spend a lot of time, where we're going to find quick rejection, find out if we're wrong or right relatively quickly, and work on those extremes. Okay, Ryan. You can get TPO charts on the Trade-O-Vate platform by clicking on this cross up here and then hit chart. Okay, don't use legacy chart. Use new chart or whatever you want to call it. And then we're going to put in ES, and we're going to choose that. Now, this is probably going to default to TPO. If yours does not, you'll find it here in chart type. You may be on candlesticks, but you can bring your cursor down here, hit TPO, and you'll have TPOs on your charts. Now, there's some adjustment that's going to have to take place, and I don't have time to do that for you right now. But at a future session or some other time, we can take a look at it. To change the properties of the TPO chart, you would just click on the gear wheel here and then click on here on the chart itself, ESU 3. Here we go. Just click on it once. Now you're going to be able to change your session times. You can add a session. You can change the colors of the letters. You can make your point of control and your value area stick out a little bit more vividly. All right. Okay. All right. Fred's talking about the crude having a gap below the market. Yesterday's pit session. Yes, there is a potential for a gap fill. Let's go take a look at it. Here's our gap. So if we do head that direction, this is a fill area. This is a target area if we do end up heading that direction. All right, back to the S&Ps now. Okay, open interest indicates continued short covering. We lost open interest on this move to the upside or continuation above our weekly kickoff low. We lost 7,300. There's a weekly kickoff high that is now in play and will be somewhat pivotal. The information from the employment numbers today kind of knocked a loop into these markets, and it's going to take some time for them to digest. Thinking we might just run right back into the week to the grind to the upside. We're going to need new buyers up here. We're not going to be able to just count on short covering at this time to continue this move to the upside. We need new buyers to come in. Short covering that we've seen for the last couple of days actually removes buying power from the marketplace. Take a look at the 30-minute chart now. Okay, here's weekly kickoff high, resistant last night. We're not open yet, but we do have a late spike. This late spike here gives us the opportunity to see if we can open in the late spike or above the late spike. It's going to mark acceptance of higher pricing, and I'll look for the market to come up and retest weekly kickoff high in the regular trading hour session. That gives us an opportunity to limit risk on either side of it. If it looks like we're accepting, we come back to it. We look for a long with a stop on the other side of it. If it looks like we're not going to accept, we take the short. We put our stop above the overnight high, and we have the opportunity to see this market rotate back to the downside. Now, when we are, when we're looking, Harry was talking about the point of control. Yesterday was one of those days where the point of control might have been a decent opportunity to continue to look for a long here. Once we closed a couple of bars above the point of control became sort of supportive. The problem is there's a lot of risk down below. So when the point of control is centrally located like this, it makes me really nervous to take trades in and around it, because the risk for it can be very substantial if we can find the edges. If we caught the opening yesterday and we took that ride to the upside, maybe we were able to stay in. I don't know if we were able to stay in all day. That would be an all day sucker, but that's the way some of these markets tend to go. Again, exhibiting short covering takes buying power out of the marketplace. We are going to need new business, new participation to continue this move to the upside. It may come in. Okay, there's lots of downside levels to look for. We've got yesterday's point of control. We've got value low from yesterday. Even value high is a target. We've got, another naked point of control down here that has not been checked in regular trading hours. And we've got last week's low. So lots of targets to look for above. We've got two below. We've got two above. The weekly kickoff high, naked point of control, and then to the all-time high. Watch and see how that the market acts if it opens in or above this late spike. The base of the late spike we're going to call approximately 43, 48, 50. If we open above that, if we can't come back and reaccept inside value from yesterday, that's going to mark acceptance of higher pricing, and we're going to look to trade in that direction. We don't have any inventory to worry about here. All right. NASDAQ. Similar situation, even a little bit stronger. The NASDAQ has maintained its ability to remain above settlement after the employment numbers came out. We've got another situation here on the daily chart where we were looking at this as a potential bull flag. We broke out and accepted above it yesterday. Are we going to continue? We've got last week's high and this line lining up nicely, but for now, providing resistance. What else do we have for the NASDAQ here? Again, we lost open interest on the upside move yesterday, so this wasn't money coming into the long side. This is money coming out of the short side. It's gonna take new buyers, new business, new participants to continue to push this market higher. Take a look now into the 30. Okay, are we a little long overnight? I'm going to go with no. We've basically taken the market back to range and back to settlement, almost on the move after the employment numbers. We're not really finding acceptance in value in range, and if we can open above the late spike, that's going to be the best scenario for continuation to the upside, as long as we don't come back down and reaccept inside value from yesterday. So there's a little bit of space here for us to look for. Watch the participation. Watch the opening range. The opening range could be a potential opportunity for us. If the opening range remains the low of the session, you take that long after that first minute is exceeded on the upside. You place your stop below it, and you see what happens. Sometimes it can offer you a relatively cheap opportunity. A relatively cheap opportunity. All right, getting a little bit long-winded here. Let's take a look at gold. Okay, in the daily. So we're basically maintaining volume. We added 15,000 in open interest yesterday. Now, it's a little confusing as to what direction that open interest came in. It was an overlapping to lower range on lower volume. Which way did the market move in their regular trading hours session? It moved higher. Was this buyers coming in and accumulating longs? It's a kind of a P-shaped profile that would indicate short covering, but with the increase in open interest, there's something else in play here. We've got, what is this, weekly kickoff low was in play last night. We've got the market leaving the opening range at the low of the session here. 1795.60 is the low of the opening range, low of the regular trading hour session. That can be important for us. If you took the opening range trade, it was good for about 100 ticks to the high of value from yesterday. Opening outside of it, accepting inside of it, pretty quick value area special situation play. Now we're back in range and value. I'm going to try and stay patient and work the extremes for my opportunities. Not going to be all that interested in trading the point of control because I'm going to put the profile on here. Okay, the point of control is up here. As we spend more time, if we build some volume down here, that's going to come down. It's just going to increase our risk. Working the extremes of the session might be more beneficial for us than looking for opportunities near point of control. And point of control can migrate throughout the day. If we get the chance in gold, there's probably some fish down there near 1791, weekly kickoff low. Pretty far away from it right now. Euro. Ooh. So we're kind of stuck in a 4-day range here. We're pushing the upper extreme of that 4-day range right now. Volume and open interest fell yesterday as we continued to try and test below last week's low without any successful auction. So the auction failed down here 3 times. We're seeing it head in the opposite direction right now. We still have downside structure remaining, but this a substantial move to the upside could change that to range bound. Take a look at the 30. Okay, short time frame was holding price lower. Obviously, the overnight inventory has been removed, if you will. The last week's low, again, supportive. We've got a pretty decent move to the upside coming in here. We lost 4,400 in this move to the upside yesterday. We're looking at a P-shaped profile that's probably short covering off the lows here. This might be some new business coming in. I'm going to be looking to see if we have an increase in open interest off this low. It's going to indicate new potential longer time frame buyers coming into the marketplace. And the 10-year. Weekly kickoff high here should be relatively pivotal. 34.03. Volume lower off the recent highs indicates possibly some new sellers, and with an increase of 11,000 on the move back into value, into weekly kickoff range. There may be some money came in to the short side up there. Nothing tremendous, though. I mean, the 10-year is such a thick market, 11,000 change in open interest is almost moot. Let's see if our head and shoulders is playing out for us. So we had our shoulder. We have our head, we have our shoulder. We broke out below the shoulder, below the neckline yesterday. Here's where the measured move would be. So we're finding it a little bit difficult to try and get down to that level. There's plenty of visuals before we can do that. We've got weekly kickoff low, pivotal, or weekly kickoff high, I should say. We got last week's high. We've got another naked point of control here. This naked point of control and this measured move off the head and shoulders might actually become magnetic at some point. All right. Another thing about the 10-year. Until recently, the opening range was the low of the regular trading hour session, but the opening range was very close to settlement. I didn't get settlement on here, 134.03. Well, I'm gonna put it here and then move it up because it is weekly kickoff level. So settlement right here, the opening range. Initially, the low of the session traded above value high. Now it traded down to value. Be patient here. Point of control is presenting here at 122. I'm sorry, not that. At 134.02 and a half ticks. I'm not going to be looking for opportunities there. I'll be looking for opportunities up here and opportunities probably down here near last week's low. Or is that the high? That's the high. All right. So we've got a very interesting opening in the equities coming up here in just a couple of minutes. Fred, don't you ever apologize for disagreeing with me. I am not the sharpest tool in the shed, if you will. It's okay, man. That's what we're here to do. Then that's what makes these markets, is that difference of opinion. Yep, right. Okay. Do you use the desktop app or the one web-based for your charts? I tend to use the desktop-based. Norman, my pleasure. Bill, all right, everybody, take your deep breath. Let's get ready for the equity open here. Stay humble, grateful, and creative in your trading today. Stay patient. Look for the good opportunities. Sometimes they're going to come to us. We're not going to find them. Have a great trading day. We'll see Dan for the last market recap of the week. No market recaps on Fridays. But as always, thanks for joining me. Hopefully this was helpful. Get out there and profit today. Trade well. I'll see you tomorrow morning.